Based on the historical data and forecast, Bitcoin shows a strong upward trend. The RSI consistently remains above 67, indicating bullish momentum. The forecast for the next week projects continued price increases, reaching $118,500. The Bollinger Bands are expanding, suggesting increasing volatility and potential for further price movement. Therefore, I recommend a long position strategy focused on capitalizing on this upward trend. Specifically, I suggest entering a long position at $111,600. Given the strong upward trend and expanding Bollinger Bands, a reasonable stop loss would be placed at $109,500 to protect against potential pullbacks. The initial target price should be $116,400, aligning with the forecast for May 29, 2025. If the price reaches $116,400, consider moving the stop loss to break even to secure profits and potentially ride the momentum further. A secondary target could be $118,500, coinciding with the final forecast price for the week. This strategy combines trend analysis, RSI signals, and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Ethereum shows a clear upward trend. The price has consistently been approaching the resistance level of $2,740, and the forecast indicates further increases towards $3,020. The RSI consistently remained above 70, indicating overbought conditions, but the price continued to rise, suggesting strong bullish momentum. The Bollinger Bands also show the price consistently trading above the upper band, reinforcing the bullish outlook. Therefore, I recommend a long position strategy. Entry price will be $2,760, stop loss price will be $2,700, and the initial target price will be $2,840. To optimize the strategy, I will incorporate RSI and Bollinger Band signals. When the RSI drops below 70, consider a partial profit booking at $2,840 and adjust the stop loss to $2,730 to protect gains. If the price touches the lower Bollinger Band, it might indicate a temporary pullback, but a quick bounce is expected. Continue holding the position, aiming for the next target price of $2,920, with a stop loss adjusted to $2,870. Finally, if the price reaches $3,020, take full profit and consider re-evaluating the position based on new data. The portfolio will be 60% long position, 30% partial profit booking, and 10% full profit. Based on the historical data and forecast, XRP shows a slight upward trend with consistent support at $2.35. The RSI fluctuates between 52.3 and 69.1, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening slightly, suggesting increasing volatility. Considering these factors, I propose a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels. We will implement a long position when the RSI dips below 55 and the price touches the support level of $2.35. The entry price will be $2.35. To mitigate risk, we'll set a stop-loss order at $2.30, just below the support level. The initial target price will be the resistance level of $2.58, aiming for a potential gain of 23 cents. For enhanced returns, we will implement a second target price based on the forecast data. The forecast suggests a price of $2.5 by May 29, 2025. Therefore, our second target price will be $2.5, providing an additional profit opportunity. This combined strategy balances risk and reward, capitalizing on the upward trend while incorporating technical indicators to fine-tune entry and exit points. The portfolio will consist of 60% of the combined strategy and 40% of the forecast data to ensure the most efficient investment. Based on the historical data and forecast, BNB demonstrates a clear upward trend, supported by consistently breaking through previous resistance levels and a projected price increase over the next week. The RSI values, fluctuating between 55.9 and 74.2, indicate periods of both oversold and overbought conditions. Considering the current RSI of 70.4 and the forecast prices, I recommend a long position. The entry price will be $684, with a stop loss placed at $682, just above the established support level. The initial target price will be $702, aligning with the forecast for May 29, 2025. To enhance the strategy, we'll incorporate the Bollinger Bands. The price consistently trading near the upper band suggests continued bullish momentum. If the price reaches $695, we'll move the stop loss to $685 to secure profits. Further, if the price reaches $712, we'll set a second target price at $721, the resistance level. This layered approach allows us to capitalize on the upward trend while mitigating risk through strategic stop-loss adjustments and utilizing key support and resistance levels. This portfolio is efficient because it combines the RSI and Bollinger Bands to maximize returns. Based on the historical data and forecast, Solana shows a generally upward trend with periods of consolidation. The RSI consistently fluctuates above 50, indicating bullish momentum, and recently approached the overbought level of 80, suggesting a potential pullback. The Bollinger Bands have been widening, indicating increased volatility, and the price is currently near the upper band, further supporting a potential short-term correction. Considering these factors, I recommend a strategic portfolio combining three approaches. First, initiate a long position at $180 when the forecast price begins. Set a stop loss at $176 to mitigate potential losses if the price declines. Target a profit at $188, capitalizing on the anticipated upward momentum. Second, when the RSI dips below 60, enter a long position at $166, with a stop loss at $165 and a target price of $173. Third, if the price touches the lower Bollinger Band, enter a long position at $140, with a stop loss at $138 and a target price of $165. This diversified portfolio aims to capture gains from various market conditions. The initial long position at $180 leverages the bullish forecast and widening Bollinger Bands. The RSI-based strategy at $166 capitalizes on potential pullbacks, while the lower Bollinger Band strategy at $140 aims to profit from significant dips. Combining these strategies provides a robust approach to maximize returns while managing risk effectively. This portfolio is designed to adapt to market fluctuations and generate consistent profits in the dynamic cryptocurrency market. Based on the historical data and forecast, Dogecoin shows an upward trend with increasing prices over the past 2 weeks. The RSI consistently hovered above 50, indicating bullish momentum, with peaks above 80 signaling overbought conditions. The Bollinger Bands have been widening, suggesting increased volatility and potential for further price movement. The forecast for the next week predicts continued price increases, reaching $0.27. Considering the support price of $0.182 and the resistance price of $0.265, the current price of $0.245 is approaching the resistance level. Therefore, I recommend a long position strategy with an entry price of $0.247. Given the current upward trend and forecast, a stop loss should be placed slightly below the recent low at $0.215, setting it at $0.21 to protect against potential pullbacks. The target price should be set at $0.263, aligning with the forecast and providing a buffer before the resistance level. This strategy combines the bullish momentum indicated by the RSI, the widening Bollinger Bands, and the positive forecast, aiming for a high return investment while managing risk with a carefully placed stop loss. Based on the historical data and forecast, Cardano shows a slight upward trend with volatility. The RSI fluctuates between 51 and 73, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increased price volatility. Considering the support price of $0.744 and the resistance of $0.906, I propose a strategy focused on capitalizing on short-term price swings within this range. My recommended strategy is to enter a long position at $0.819 on May 23, 2025, based on the forecast price and the recent upward momentum. we will set a stop loss at $0.78, just below the recent low and below the lower Bollinger Band, to limit potential losses. The initial target price is $0.885, aligning with the forecast price for May 29, 2025. If the price reaches this target, we will consider moving the stop loss to break-even, $0.819, to protect profits and potentially extend the trade further. If the RSI approaches 80, we will consider taking partial profits or tightening the stop loss to manage risk. This strategy aims to capture short-term gains while mitigating risk through careful stop-loss placement and profit-taking considerations. Based on the historical data and forecast, TRON exhibits an upward trend. The RSI consistently fluctuates above 50, indicating a bullish momentum. The forecast price for the next week projects a continued increase, reaching $0.291. Considering the support price of $0.266 and the resistance price of $0.28, a strategy combining RSI and Bollinger Bands is recommended. The RSI is currently around 60, suggesting a potential for a rebound. We will implement a buy strategy when the price touches the lower Bollinger Band, with an entry price of $0.263. The stop loss will be set just below the support price at $0.264, and the initial target price will be the resistance price of $0.28. To maximize potential gains, we will employ a trailing stop loss strategy. Once the price reaches $0.275, we will adjust the stop loss to $0.27. Further, when the price reaches $0.28, we will raise the target price to $0.287. The final target price will be $0.291 based on the forecast. This dynamic approach allows us to capture substantial profits while mitigating risks associated with market volatility. This strategy combines technical indicators and price forecasts to optimize returns while maintaining a disciplined risk management approach. Based on the historical data and forecast, SUI demonstrates a slight upward trend, consistently bouncing off the support price of $3.8. The RSI readings have fluctuated between 59.6 and 75.6, indicating periods of both overbought and oversold conditions. The Bollinger Bands show that the price has been trending towards the upper band, suggesting bullish momentum. Considering these factors, I recommend a long position strategy. We will enter a long position when the RSI falls below 20, indicating an oversold condition. However, given the recent RSI values, a more conservative approach is warranted. Therefore, we will enter a long position at $3.85, placing a stop-loss order at $3.78, just below the lower Bollinger Band. The initial target price will be $4.11, aligning with the first forecast price. To maximize potential returns, we will implement a dynamic target strategy. If the price reaches $4.11, we will move the stop loss to the entry price of $3.85, securing profits and protecting against potential downside risk. Subsequently, we will reevaluate the RSI and Bollinger Bands. If the RSI remains below 80 and the price continues to trend within the upper Bollinger Band, we will set a second target price at $4.23, the final forecast price. This combined strategy leverages both technical indicators and forecast data to capitalize on the observed upward trend while managing risk effectively. This portfolio combines the three strategies with the most efficient strategy. Based on the historical data and forecast, Chainlink shows a clear upward trend. The price has been fluctuating within the range of $15.3 to $17.4. The RSI indicates that the asset is nearing overbought territory, but hasn't crossed the 80 threshold. The Bollinger Bands suggest that the price is currently near the upper band, indicating a potential for a pullback. Considering these factors, I recommend a long position with an entry price of $17.1. The stop loss should be set slightly below the support level at $15.3, specifically at $15 to avoid being triggered by minor fluctuations. The initial target price is set at $17.8, aligning with the upper Bollinger Band and a reasonable price increase based on the forecast. To refine the strategy, we'll implement a tiered target approach. After reaching the first target of $17.8, we'll move the stop loss to the entry price of $17.1 to secure profits. If the price continues to rise, the second target is $18.2, based on the forecast. If the price reaches $18.2, we'll close half of the position and move the stop loss to $17.8 for the remaining position. This approach allows us to capitalize on the upward trend while mitigating risk through strategic stop-loss adjustments and profit-taking at multiple levels. This portfolio combines the RSI, Bollinger Bands, and support/resistance analysis for a balanced and potentially high-return investment. Based on the historical data and forecast, FLOKI exhibits an upward trend, supported by consistently increasing forecast prices. The RSI indicates the asset is approaching overbought territory, fluctuating between 51.6 and 76.0. The Bollinger Bands show a narrowing trend, suggesting increasing volatility. Considering these factors, I recommend a long position strategy with a focus on capitalizing on the predicted price increase. The entry price will be $0.000112 on May 23, 2025, coinciding with the start of the forecast period and a bullish signal. The stop loss will be set at $0.000980, just below the support level, to mitigate potential losses if the price reverses. The initial target price will be $0.000118, aligning with the upper Bollinger Band and a potential resistance level. To optimize returns, I propose a dynamic strategy adjusting the target price based on RSI readings. If the price reaches $0.000118 and the RSI falls below 80, consider raising the target price to $0.000122, based on the forecast data. This will allow us to capture further gains. Conversely, if the price approaches $0.000112 and the RSI dips below 20, consider closing the position to avoid losses. The portfolio will prioritize this long position due to the strong bullish forecast and the potential for high returns, while incorporating RSI and Bollinger Band signals for risk management and dynamic target adjustments. Based on the historical data and forecast, Curve DAO shows a generally upward trend with recent volatility. The RSI fluctuating between 47.5 and 70.6 indicates periods of both oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increasing price volatility. The forecast for the next week predicts a continued upward trajectory, with prices potentially reaching $0.876. Given these factors, I propose a combined strategy leveraging RSI and Bollinger Bands for optimal returns. My recommended strategy involves a long position with an entry price of $0.788, coinciding with the support level and a relatively low RSI of 47.5. A stop-loss order should be placed at $0.753, just below the recent low, to limit potential losses. The initial target price is set at $0.841, aligning with the forecast price for May 28, 2025. If the price continues to rise, a secondary target can be set at $0.876, the forecast high for May 29, 2025. This strategy aims to capitalize on the predicted upward trend while mitigating risk through strategic stop-loss placement. Based on the historical data and forecast, Bonk demonstrates a generally upward trend with periods of consolidation. The RSI fluctuates, but remains mostly above 50, indicating bullish momentum. The Bollinger Bands have been widening recently, suggesting increasing volatility and potentially a continuation of the upward trend. The forecast for the next week predicts a continued rise in price. Considering these factors, I recommend a long position strategy focusing on capitalizing on the upward momentum. My proposed strategy involves entering a long position at $0.0000231. Given the support level at $0.0000202, I will set a stop-loss order at $0.0000202 to limit potential losses. The first target price will be $0.0000248, aligning with the forecast price and the upper Bollinger Band. If the price surpasses this target, I will adjust the target price to $0.0000250, based on the recent historical high of the upper Bollinger Band. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Wormhole shows a slight upward trend with recent volatility. The RSI fluctuates between 51.5 and 69.4, indicating neither strong overbought nor oversold conditions consistently. However, the forecast suggests a continued upward trajectory, potentially reaching $0.115. Considering the support at $0.0934 and resistance at $0.162, a strategy combining RSI, Bollinger Bands, and trend analysis is optimal. We will implement a long position when the RSI dips below 55 and the price touches the lower Bollinger Band. The entry price will be $0.0934, with a stop loss set at $0.092 to mitigate potential losses. The initial target price will be $0.108, aligning with the forecast for May 23, 2025. To maximize returns, we will employ a dynamic trailing stop-loss strategy. Once the price reaches $0.108, the stop-loss will be adjusted to $0.105. If the price continues to rise, we will increase the stop-loss further, ensuring profits are locked in. The final target price will be $0.115, based on the forecast for May 29, 2025. This combined strategy leverages the RSI for entry signals, Bollinger Bands for confirmation, and the overall trend for profit targets, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Pepe shows a generally upward trend, although with periods of consolidation. The RSI consistently above 70 for a significant portion of the historical period indicates overbought conditions, suggesting potential for pullbacks. However, the forecast data projects continued price increases. Considering the support price of $0.0000144 and the recent RSI readings, I recommend a long position entry at $0.0000151. A stop loss should be placed just below the support level at $0.0000143 to protect against a significant downturn. The target price for this trade is set at $0.0000167, aligning with the upper end of the forecast range and providing a reasonable profit margin. To refine this strategy, we can incorporate the Bollinger Bands. The price consistently trading near the upper band suggests a strong uptrend. If the price touches the upper band of $0.0000158, we can consider taking partial profits while maintaining a portion of the position for further gains. Conversely, if the price breaks below the lower band, it signals a potential trend reversal, prompting a review of the stop-loss level. This combined RSI and Bollinger Bands approach aims to capitalize on the upward momentum while mitigating risk through strategic stop-loss placement and profit-taking opportunities. Based on the historical data and forecast, Jupiter demonstrates a clear upward trend, supported by consistently breaching the Bollinger Bands and an RSI hovering above 50. The forecast for the next week projects continued price increases, with a peak at $0.616. Given the current RSI of 64.9, which is approaching the overbought level of 80, a cautious approach is warranted. Therefore, I recommend a strategy focused on capitalizing on short-term upward movements while mitigating risk. My proposed strategy involves a series of short-term buy positions. Entry price will be $0.574 on May 23, 2025, Friday, coinciding with the forecast price and recent price action. A stop loss will be set at $0.559, just below the recent low and within the lower Bollinger Band, to limit potential losses. The initial target price will be $0.583, aligning with the recent high and providing a quick profit opportunity. If the price continues to rise and breaks above $0.583, we will adjust the target price to $0.616, the peak of the forecast, while maintaining the stop loss at $0.574. This strategy combines technical indicators with forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Starknet shows a slightly upward trend with volatility. The RSI fluctuates between 47 and 73, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening recently, suggesting increased volatility. Considering these factors, I recommend a combined strategy utilizing RSI and Bollinger Bands to capitalize on short-term price movements. We will implement a strategy with an entry price of $0.174, a stop-loss price of $0.149, and a target price of $0.183. The strategy involves buying Starknet when the RSI dips below 40 and the price touches the lower Bollinger Band. Conversely, we will sell when the RSI exceeds 70 and the price touches the upper Bollinger Band. Given the forecast for the next week, with prices hovering around $0.174 to $0.178 and RSI values suggesting a neutral to slightly bullish sentiment, entering at $0.174 aligns with this forecast. The stop-loss at $0.149, the established support price, protects against significant downside risk. The target price of $0.183, based on the forecast high and the recent resistance levels, provides a reasonable profit target. This combined approach balances risk and reward, maximizing potential gains while minimizing potential losses. Based on the historical data and forecast, Injective exhibits a clear upward trend. The price has been consistently making higher highs and higher lows, and the forecast for the next 2 weeks indicates continued upward momentum. The RSI values have generally been above 50, with several days exceeding 70, suggesting the asset is often in an overbought condition. However, given the overall trend, these overbought conditions present opportunities for strategic pullbacks and entries. The Bollinger Bands show the price has been fluctuating within a defined range, and the recent price movements have been nearing the upper band, reinforcing the bullish outlook. Therefore, my recommended investment strategy is a combination of trend following and RSI-based entries. We will initiate a long position at $13.6, capitalizing on the forecast price and the overall upward trend. A stop-loss order will be placed at $13.2 to protect against a potential reversal. The initial target price will be $15.1, aligning with the forecast high for May 29, 2025. As the price approaches the target, we will consider moving the stop-loss to break even to secure profits and allow for further upside potential. This strategy aims to leverage the positive momentum while mitigating risk through strategic stop-loss placement and dynamic target adjustments. Based on the historical data and forecast, Zcash shows a clear upward trend. The recent RSI values have been fluctuating between 55.4 and 74.2, indicating periods of both overbought and oversold conditions. However, the overall trend is bullish, supported by the forecast prices consistently above $45.6. The Bollinger Bands have been widening, suggesting increasing volatility, but the price has generally remained within the bands. We will implement a combined strategy utilizing RSI and Bollinger Bands to maximize potential returns. Our strategy will involve a long position. The entry price will be $45.6 on May 23, 2025, coinciding with the first forecast price and a potential pullback after the recent upward movement. The stop-loss will be set at $40.4, just below the recent low and the bottom of the Bollinger Bands, to limit potential losses. The initial target price will be $49.5, aligning with the forecast price for May 26, 2025. If the price reaches $49.5, we will move the stop-loss to the entry price of $45.6 to secure profits and further capitalize on the upward trend. This strategy balances risk and reward, leveraging both technical indicators and forecast data for optimal performance. Based on the historical data and forecast, Worldcoin shows a generally upward trend with some volatility. The support price consistently remains at $1.3, while the resistance fluctuates around $1.63. The RSI indicates periods of both overbought and oversold conditions, with the most recent readings suggesting a neutral to slightly bullish momentum. The Bollinger Bands have been widening, indicating increased volatility, and the price has recently approached the upper band, suggesting a potential pullback. Considering these factors, I recommend a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels. My strategy involves a long position with an entry price of $1.35. The stop-loss should be set just below the support level at $1.28 to protect against potential downside risks. The initial target price is set at the resistance level of $1.58, aligning with the forecast data. We will use a trailing stop-loss strategy, moving the stop-loss to the lower Bollinger Band as the price increases, securing profits and limiting potential losses. If the price reaches the resistance level, we can consider taking partial profits and setting a new target price closer to the overall resistance of $1.63. This combined approach leverages multiple technical indicators to maximize returns while managing risk effectively.